Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES has been in breakout mode and testing higher prices. At this point, heading into the open, we know that on the smaller time frames, the buy side is in firm control. And as long as ES can hold above pre-market support and initial support, so 95 to 97 and 89.75 to 91.75, there's potential that ES could balance here and then put in another continuation move and a breakout for a test of the 1912 to 1915 initial resistance and the 20 to 21 resistance zone. Now, since ES is in a bullish phase on the smaller time frames and it has been putting in these balanced breakout patterns, as it moves higher, the 12 to 15 area is not necessarily an area that we're going to look to actively short at this point unless we are seeing some signs of intraday weakness or a general lack of strength as ES gets up there. So 12 to 15 is an area where there can be some profit taking, there can be rotation at the zone, but given that the buy side is in firm control on the smaller time frames, and the range would not really be exhausted into 12 to 15, there is potential to go higher and test 20 to 21, which is an area where we can get responsive sellers active on first test, and followed by that, we have resistance at 26 to 27.5, and 31.5 to 33.5 would be an area where sellers can be more aggressive and active again. On the downside, ideally, you want to see ES holding above 95 to 97. That is an area where we've seen consolidation, and it marks a smaller time frame balance area low just for the overnight session. So if we're holding 95, 97, it tells us that the short-term balance that ES has developed in the overnight session is intact and the breakout is intact. Now, if we're breaking 95 to 97, we just want to make sure that the breakdown is not happening on very strong downside momentum, right? So if we are getting, a lot of weakness on the NYC tick, we're seeing a lot of downward momentum, then we need to be careful because in that case, it could be setting up to be a failed breakout attempt, right? So that's a pattern we've seen over the last couple of weeks where ES attempts to break out but then fails. So as long as we're not seeing strong downside momentum, we can still consider buying the initial support zone. And if the market is really exhausted into initial support, so if it goes there in a straight line, that's another scenario where we can get a bounce and a rejection because that is really, the breakout area from the overnight session. So there's still potential that 89.75 to 91.75 can hold. We just want to make sure we're not seeing, just very clear weakness in the price action and a lot of downward momentum. You want to have the ES just pull back, and as long as it looks like a normal pullback, nothing excessive, then it's still an area where buyers can defend. Below that we have Friday's high at 1882, and we have support at 78 to 80, and that's an area again where responsive buyers can be active. So on the downside, pretty much every support zone can attract responsive buyers. But ideally, you want to see the market holding above initial support and pre-market support. But in the event that the breakout fails, it doesn't necessarily mean that we have to completely reverse and go all the way back down to the recent lows. The market could just continue to balance in a range, and that means buyers can still be active at 78 to 80, at the gap fill at 75, and the 70 quarter to 72 quarter zone is a decent area of support first time down, and a high probability long setup first time down. So again, given the strength we've seen in the overnight session, ideally you don't want to see a deep pullback, and ideally you want to see continuation towards at least the 1912 to 15 zone, and quite possibly upwards of 20 to 21. And then beyond that, you would start stretching the range a bit, and those become lower probability targets. Doesn't mean it can't get there, but the odds of it getting to 31.5 to 33.5 are of course lower than the market reaching the 12 to 15 and 20 to 21 zone. So our focus is going to be more on the long side, given the short-term bias, and we are going to be more careful on the short side, just because if this pattern of breakout continues, then we could quite easily tag the 12 to 15 area. So those are the main thoughts heading into the open. Let's see if the buy side can maintain the control that we've seen in the overnight session, and we'll take it from there.